Hello, traders. It is Wednesday, June 10th, and we're waiting for the Fed. We've got that announcement coming in about 2 hours or so. Right now, we're about 2 hours and 45 minutes into trading. Had a little bit of a market sell off this morning. Nothing too dramatic, but yesterday was one of our first down days that we've had in a very long time. So let's take a look at that chart and see what's going on. You can see here how the SPY has gone a little bit parabolic in here, only about 200 S&P points away from the all-time high. Incredible, given the largest market decline since the Great Depression. What the heck? How did we come back so far so fast? Well, part of it's because of all the stimulus that's been thrown at the market. Asset managers are erring on the side of being long. They know that there's a safety net in the Fed. They keep printing money, and it's not just the Fed, it's central banks around the globe. Also, governments are engaging in fiscal stimulus, so lots of money floating around. It's making its way into the market. If you take a look at valuations right now, they're very, very stretched. It's as if we never had the shutdown, which to me is ridiculous. Now you've got some mega cap tech stocks, Microsoft, Amazon, Apple, Google, Facebook, Twitter, Netflix, all of them, every single one of them has benefited from the coronavirus. However, that's not representative of all of the other stocks. And those companies, Q2 is going to be super nasty. Now, the market might be able to look past that and think that, hey, consumers are ready to get their life back on track. Once we start gaining some traction here, everything will be fine. In Q3, Q4, Q1 of next year, everything will be clipping along. So we're just going to look at this as an aberration and we're going to put it behind us. However, that might be true, but it's going to take quite a while for stocks to grow into their current valuations. And so I believe that at best, the market treads water. Now, I believe that somewhere in here we're going to see a couple of long red candles that bring us back into the maybe 307.50 level. Maybe we get down to the SPY 300 level. You can see that that's where the major MAs start to come into play as well. So that's a very, very strong support level at SPY 300. So what do we do until then? I think you've got to be very passive. I think that if you overextend yourself on the long side, what's going to happen if you start selling a lot of bullish put spreads on the notion that the market's going to tread water and you get one of those really big down days, you're going to be right at the money with your bullish put spreads. They're going to be working against you. You're going to have a decision to make. Do I bail on them? Do I buy them back in? And if we get another down day, now you're in the money. Uh-oh, now what do I do? Now that same thing is going to happen to every other bullish speculator. And they're going to be waiting and wondering what they should do. Instead of managing losing positions, the prudent thing to do, and I've been doing this for 30 years, the prudent thing to do is to sit back, be in cash, have the ultimate flexibility to evaluate the market objectively. And instead of trying to reel back and adjust losing positions, you're simply looking for opportunities. That's the way I'm going to play it. I take a lot of flack. Oh, what are you talking about, Pete? The market looks great. It's moving higher. How come you're not trading from the long side? Well, I am day trading from the long side. I've cut my day trading positions in half. Half of my normal size in the morning is what I'm trading. In the afternoon, I'm trading a quarter of my normal size. Well, why are you doing that? Because I need to stay engaged. I need to be able to watch price action. It helps me identify opportunities when market conditions finally do change. I'm able to roll with the punches and I'm able to identify relative strength because I've been monitoring these stocks for the last week or 2 or 3 weeks prior to that dip. So I know where to find the relative strength. I also know where the weakness is so that when the market does finally pull back, I'll have some intraday shorting opportunities. I am not shorting the market overnight. This market rally has been way too powerful for me to try and get cute with it right here, but I will short intraday once we get that move. So pretty much everything I'm doing right now is very, very small. It's intraday. I'm wondering when we're going to get that pullback. I don't know what that event's going to be. And it doesn't have to be anything earth shattering. It doesn't have to be any huge news that there's a new tariff war with China and Trump's going to do this or that. It doesn't have to be anything like that. We have bullish sentiment right now at almost historic highs. It hasn't been this high in a couple of decades. Bullish speculators will get flushed out. When they do, we're going to have that nice pullback that lasts maybe a couple of days, long red candles. And when that starts to happen, you've got sell programs that start to trigger, and then they kind of feed on themselves, and that forces the bullish speculators out of their positions. Now, I do still believe that a lot of asset managers are under allocated, so there will be a bid to the market. They're waiting for that pullback. Once they see support, they'll be in, and we'll get a nice quick rebound. That dip, that market dip that I keep referencing, is going to provide us with an excellent entry point for selling out of the money bullish put spreads. And in some cases, I may even be buying calls, longer term calls on the notion that the market is going to gain some traction and that the economy is going to also start improving. So right now, I'm not doing a whole lot. I will show you some stocks. I showed you some stocks yesterday that looked really good. So the thing to keep in mind right now, we have an FOMC statement today. Everyone's expecting it to be very dovish. They're not expecting the Fed to raise interest rates until the end of 2022, so that's a long time off. I don't think it's going to be a spoiler today. I don't think you're going to see a big market pullback. We'll watch. We'll wait and see. We'll go to the 5-minute chart right now. We'll take a look at the price action in the last couple of days. And you can see how yesterday we gapped down. Market tried to fill in that gap, but couldn't quite get there. Pretty close. And then today we saw additional selling. We took out the low of the day from yesterday, but we're still, this line right here is the opening gap higher from Friday. We're still a good distance from that. So I see market support forming right now into the FOMC. We had this low right here, then we made what I call a marginal new low with a bullish hammer right here. Once I saw that and we got back above the low from yesterday, I suspected that the lows pre-Fed are in. Now, if they say something hawkish, obviously we can take out that low and that low very quickly. But I'm not expecting that. So I'm in a holding pattern right now. Almost every CEO has said that Q2 is going to be much worse than Q1. So when those earnings come around, I think everybody is going to be looking at valuations and trying to determine where those stocks really should be trading. But right now, everything is floated higher on the notion that this recovery is going to be very speedy and that the Fed is waiting to take action if needed. So let's go in and take a look at the stocks that I highlighted yesterday. We've got a nice little bounce here up above the low from yesterday right now. You can see the market. I'll keep that in the background. We're going to be quiet into the Fed. We've got about 2 hours of trading left. Here's one reason that you need to be very cautious. When you have a light volume rally, and you can see how this part of the rally right here has taken place on very low volume. Now, there was one day right here, and that was the unemployment report on that Friday. That was a good volume day. But apart from that, you can see how the volume has been steadily decreasing as the market rallies. That means that there is a fairly low level of conviction. So be cautious. Let's go in and take a look at the stocks that I highlighted yesterday. I'd mentioned that there's going to be two-sided trading. There'll be opportunities on both sides. The stocks that I showed you yesterday were Apple, and I showed you that rotation into mega cap tech stocks. If you had bought Apple, you're a very happy camper. In fact, I came out last Sunday night with a special YouTube video. I highlighted Apple. I gave you the instructions on Monday. Stock has been on an absolute tear. Now, I didn't say buy it and ride it for a long time because I'm still being very cautious. However, you had a great opportunity to take profits on Monday, and the stock and the market closed on their high Monday, so you would have been able to hold over some of that position on Tuesday. Stock really rallied hard yesterday, so you should have had some super nice gains in that one. But I'd mentioned yesterday when I took the video, I said, listen, Apple looks great. It's making a new all-time high. I think it's good into the close. I think it's going to be good overnight. It certainly has been. So let's keep taking a look at some of the other stocks that I showed you yesterday. On the long side, Amazon, very nice. Nice gap higher today, new all-time high, going to that D1 chart. You can see beautiful breakout right there, upward sloping trend line. Yep, Amazon looks really, really good. And I also highlighted Facebook. Facebook, you can see, is kind of treading water and it's pretty choppy in here. It hasn't done much, so it's not gaining traction like the others had, but it is trying to hold these gains at a new all-time high. So it may have to spend a little bit of time here before it makes its next leg higher. Tesla was the other one that I showed you. Look at that baby. Ooh, nice one. So that stock is up big time from yesterday's video, somewhere in the 948 level. Today it's at 1015. Really, really nice gain. Strong, strong momentum. So all of my longs yesterday did really well. I also gave you two shorts to take a look at. And those were all the longs. Those weren't some of the longs that I showed you yesterday. Those were all the longs. And I do this to give you an idea of what my track record is and what my performance is and how accurate my research is. That's the only reason for doing this. Disney was one of the shorts that I showed you yesterday. Right in here. That was a nice short. You had definitely some nice profits that could be taken there. And if we go into the daily chart, I had mentioned that 200-day resistance level that was holding, possibility to sell an out of the money bearish call spread. That's in nice shape today. So yeah, I think Disney did well overnight on the short side, and I think it continues to be a decent short. The other one that I showed you was WYNN. And there you can also see how the stock dropped this morning. It's lower than where the video came out yesterday. So I've given you longs and shorts, and all of them are working out right now. And that's the beauty of what we do. This is not happenstance. This is not luck. This is a systematic trading approach that evaluates relative strength, relative weakness. We use our proprietary indicators to tell us which stocks are the ones that we want to be in. That's how it works. So now I'm going to go through two of my searches. I'm going to give you a long today, and I'm going to give you a short today. So let's focus on the short side, see what we've got. I'm going to go into my heavy selling search, and I'm going to go right to the top candidate. Boom. Number one. What's up there? Boeing. Okay, well, if Boeing closes below the 100-day moving average today, I think that that's a decent short. You've got airlines are hurting in a big way. A lot of them have canceled their orders. So Boeing's got a lot of litigation coming up too. So I think that this stock is going to see some selling pressure. And if I were going to do a bearish trade on it, I would probably look to sell a 240 call and maybe buy a 245 call. Do that for $1 credit. You might have to go out 2 or 3 weeks to get that kind of credit. But here's the most important thing. The stock must close below the 100-day moving average, and I would actually prefer to see it do that for a couple days in a row. Then I would feel that it's a good short. So if you're evaluating this for an overnight short and the stock is above the 100-day moving average, don't do the trade. That would be foolish because this is a support level until it's violated. So I needed to mention that. I don't want anybody shorting the stock with it above the 100-day moving average, having it fly higher and then go, oh, I lost money on that. No, you've got to have these technical breakdowns. That's how it works. Every time we have a checkbox marked, and this a technical breakdown would certainly be one of the checkboxes below a major moving average, it increases our probability of success. The more boxes we can mark, the better the trade. So right now we've got a very, very strong market that has not backed off yet. And it may in the next week or two, but until it does, you've got to assume it's going to tread water and maybe inch its way higher. This is not a great market to short in. But if you're really going to distance yourself from the action and you're super anxious to take some shorts, Boeing probably would work below that 100-day moving average. Did you see how easy it was to find? Click through a couple of other stocks here. Another one testing the 100-day moving average, UAL, below the 100-day moving average. This is the second day below it. Probably a good shorting opportunity at that major moving average, but you got to play it light. So let's go in alongside and see what we've got here. I'm going to go into Pop Bull there, see what we've got. NVIDIA. Love it. That's my long of the day. I love this compression here. I love this horizontal breakout. You can see how the stock gapped higher to a new high, and that opening price was able to hold, and the stock has been able to grind higher on a day when the market is down. Really, really nice one. So yes, I would day trade NVIDIA from the long side. Would I do any kind of out of the money bullish put spread on it? This is a volatile stock. Uh, Gosh, given my market opinion right now and the fact that I'm looking for a decent pullback, I'd be super careful, and I would probably have to sell down below that 350 level, maybe a 345, 340 bullish put spread that expires this Friday. That I might be comfortable with. Going out much farther than that, pretty tough. There are times as a trader when you have to be in largely a cash position, when you're just waiting for clarity, you're waiting for some market momentum. This is one of those times. And I took a lot of flack for this too back in February because we had this little dip right in here and it looked like the market was going to sell off. And we had a number of our bullish put spreads at the time. We were riding this super hard since September last year. We were selling out of the money bullish put spreads every single week, and we just kept rolling and rolling into new ones. They kept expiring, which is fantastic. We made a lot of money. And then I started to taper off when the market started to hit this compression, and I was reading about the coronavirus hitting China. And we got this pullback. I thought, okay, there's our little crack. Things are going to start heading south. I want to make sure that we are in cash. So when these bullish put spreads expired and the market rallied, I took a little bit of flack. People were going, Pete, we're at a new all-time high. What are you doing? How come we're not in the market? I could sense that the conditions were ripe for a big market sell-off. We did not have any positions on when the market did finally crack, and our patience paid off. I am not looking for this kind of move. My point is that there are times when you should not have a lot of risk exposure and you need to wait for the market clarity. And in this particular case, I think the next really decent move is going to come off of a market pullback, and we'll be able to buy that dip and get back in at a good entry price. And on that dip, we should see option implied volatility spike again. That'll let us distance ourselves from the action. That's how I'm playing it. So, am I going to be sad when the market keeps floating higher and I'm not participating? Absolutely not. I feel that the upside reward is much smaller than the downside risk. This is a time that you want to be sidelined, so keep it very small. These are the dog days of summer. I hope I've made that abundantly clear to you. If you like the content, please give it a thumbs up. Also, please subscribe to my YouTube channel and turn on your notifications. Then you'll never miss one of these videos, and I'll have actionable trades in each and every one of them, plus lots of education, just like I gave you. Thanks so much for watching. Let's see what the Fed does today. I'm expecting us to wait and do nothing after the Fed announcement. So we'll see. Thanks a lot. We'll see you tomorrow morning. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.